This afternoon. I have a few trade recaps for us. I haven't done this in a minute. But before we join into the trade recap, when I was having, when I was struggling trading, looking for what method, what analysis will work and stuff like that, I came across a strategy that is called the STRAT. It was invented by a guy called Rob Smith, on Twitter. He's called Rob in the Black. And recently, I think sometimes this week or last week, he passed away. So just want to take this moment to say thank you to Mr. Rob. I pray God be with his family. And thank you for the wonderful legacy you left us. Especially when it comes to the stock market. So that is that. We're going to be looking over three tickers that I traded today. One is WFC, Wells Fargo. The other is OXY, Occidental Petroleum, and the last one is AA, Alcoa. I'm gonna go over, what I look for coming into the market, then the setups, like my setups pretty much going into the market for the day, and then the way I choose to take the trades right after that. So let's start with WFC. So last week Friday, WFC closed with this big red. It was a red day in the market for WFC on Friday. So when I was setting up for this week, I was looking for some type of continuation to the downside here on WFC. But as you guys can see, yesterday, literally WFC opened where it closed on Friday, and then he posted what we'll consider inside day. According to Rob, that's kind of is called a one, pretty much. So we had an inside day yesterday. So my plan coming into the market is, I'm still kind of bearish, if I'm being quite honest, with WFC because I know that banks have ran up a little bit lately, and that we have FOMC coming on Wednesday. So I was looking for some movement towards the downside, just looking at an overall market analysis. Banks do not like high rates, that much. It affects them. So I had a couple of levels marked. I was looking if we go below 45.95, I'm going to go short. If we go above 46.83, I'm going to go long. Once again, like I said, I'm much more interested in the short movement. Now, also, there is something that I like to do is I use Fibonacci a lot. And I do believe the movement of one day always goes into the next day. So I measured the movement of yesterday. As you guys can see, we kind of closed into a weakness yesterday. If I go to the daily chart of yesterday on the 15 minutes chart, you guys will see that when the market was closing, it did not close into strength. It pretty much, the market closed into weakness. This was yesterday. Yeah. We went up and then we kind of just closed into weakness. This is the weakness of the close yesterday. So I was looking at that weakness. I consider that weakness to be a retracement, of whatever move that we've had earlier on during the day. So what I did was I put my Fibonacci ratio from the low of yesterday into the high of yesterday. I only care about two levels on Fibonacci, and that is going to be the 0.5, the 50% retracement, and the 61% retracement. Typically, when something is pulling back into those levels, there are one or two things that is going to do. That level will either be a support where it's going to bounce and continue upwards, or it's going to go underneath and that level will now become unresisting. So my plan is I'm either going to short below those Fibonacci levels, or I'm going to short below 45.95, which was the low of yesterday, which also happens to be the low of last week Friday. So now let's go into what happened in the market right at open. I'm gonna go into 15-minute chart. I work full time, so I try to look at my plays based on 15 minutes. Once in a while, I do look at the 5 minute, but I try not to rush into the plays, like that. Now, let's look at the way we open. I use candlestick analysis a lot, the way I look at the market. And we open with something that is somewhat of a shooter. Of course, it's not the perfect shooter, but it is a shooter. It is a bearish candle. Now, check this out. That candle literally aligns to our Fibonacci level of yesterday, right? It aligns to that Fibonacci level, and there was rejection at that level. Even if we go to a smaller time frame, which is going to be the 5 minutes time frame right here, let's see the way it opens. Today's on the 25th. We opened with what we call a 212 to the downside. We opened with an inside candle right there. The first 5 minutes was green. The second 5 minutes was an inside candle, but it was bearish. And the third 5 minute was a move to the downside, right? So immediately we established, and once again, like I said, I'm much more looking at the 15 minutes chart, for this trade. Let's adjust our zoom so we can see properly once again. So immediately we established the first 15-minute candle, which was at around 46.29 to the downside. I went short on this trade immediately. I went short on this trade, and I continue to draw Fibonacci throughout the course of the day. If you look at the initial move of the day to this low, when we start having a pullback, we never went over that level, right? We never went over, we never retraced that much, so I was able to stay in that trade. It was kind of simple and straightforward, the way I try to look at these things. I look at the first 15 minutes candle, it was a rejection on the 5 minute. Looking at its closer on the 5 minute, it was literally a console. The first 5 minutes was green. It was a bounce of that Fibonacci level. The next 5 minutes was an inside candle, which was a consolidation. The third 5 minute, we give direction, towards the downside. And, to even be more patient, I try to look at it on the 15 minutes chart. And on that 15 minutes chart, we have it. It could not be cleaner, and more straightforward than this. And this was a good profit for me on the day with WFC to the downside. Now, the second ticker that I traded for the day, this was a move to the upside. I'm also going to walk us through the setup of this, what I've been looking at on this ticker for a minute now. So this is Alcoa. It is AA. They are in the industry, in the materials industry, in terms of what they do, Alcoa. And I saw this move that we had on Friday. This was on Thursday rather. It was a huge move to the downside. Then the next day we posted a red. Pretty much the way I think and look at this thing, a green rather. The way I look at this thing is, all right, you have a significant move to the downside. What is going to happen is either one or two things. You could have like a retracement, or you can have a follow through, a continuation to the downside. And even for our core, if you look at this is what we look like on the weekly. So there's not really much more of you looking, okay, is the direction of the weekly? This is just me straight up playing, okay, we have a significant move to the downside. We have a consolidation the next day. Are we going to move back to the upside? Now, and this I didn't even do when I was doing my initial analysis, but if you measure this first move to the downside, right? The next 2 days, we came back to that retracement. The first, when we have that retracement, it's come back to the, to the 0.50 level. But that was not what I was looking at all, because I actually did not trade core. I didn't trade it on Friday. I did not trade it either on Monday. But as part of what I was looking at, my goal was that, all right, we have a 212 to the upside. If we keep retracing, can we retrace the full level to come back all the way to this level at, I think that is 35.76. So I'm looking for a move over 34.31. If we move over 34.31, we can, at least go back to test 35. 36. Of course, we can have our second level of profits target over there. We can have our third level of profits target. But honestly, I wasn't looking at those. Take profits 2 or take profits 3. I was just focused on the first take profit. Also, what I kept in mind is, based on this move, we already went over that Fibonacci level. If we're able to get over that retracement Fibonacci, that resistance could become a support, right? So now let's see the way it looks on a much more lower time frame. Let's first go to the 15 minutes time frame. I'm gonna adjust this so we can see it properly. Now this is the trade. This was actually my first, my second trade of the day, just based on the time. If you see when we open on that Fibonacci zone. I believe that's what is called the golden zone, right? And what's supposed to be a resistance is now a support for us, right? When we were underneath that level, it was supposed to be a resistance. Now, when we get above that level, it becomes a support. So remember, I'm looking for a trigger to go long on this trade above 34.31, right? Once again, let's go to the daily chart so we can see it properly. Above 34.31, which was the high of yesterday, I plan on going long, looking at 35.76 as my take profit. We're going to go back to the 15 minutes chart and see the ways this set up. Actually, I want us to go back to 5 minutes because I looked at this a little bit on the 5 minutes today since it wasn't giving me the setup I was looking for. So the first 5 minutes, I did not take anything on this trade. During the first 5 minutes, I allowed the first 5 minutes to set. We have a shooter. Now, let's say I was, fully in the zone for this trade. In all honesty, I supposed to go long right after this first 15 minutes, first 5 minutes candle. However, that's not what I did. I did not go long after this first 5 minutes candle. I waited 15 minutes. I always try to wait for 15 minutes before getting into a trade. Now, I could have just said, you know what? We have an hammer, not a shooter. We have an hammer, is one of the signs of reversal, candlestick analysis. We have an hammer. I could just jump in, go long and just risk this hammer as my stop loss for the trade. However, that's not what I did. I waited for the first 15 minutes to be complete. Now, after the first 15 minutes was completed, I was looking at this level, which was the high of the last 5 minutes candle. I realized that we had a small pullback, but we did not, we did not really break downwards. And my goal was that, okay, if I'm to get into this trade, I'm going to use the low of this candle as my stop loss. I want to keep that risk to be as tight as possible. So immediately we started becoming green on the beginning of the second 15 minutes. I just went long on this trade. I initially bought 10 contracts, then I bought 20 contracts after that. I went long, I rolled this up, and I'm always straight. I did not even wait for us to hit the target at 35. I believe that target that we have up there. Let me go back to the daily just to make sure I'm pointing to the right target. I did not wait for that target. I just waited for this target. This was the target that I went with. Let me remove that. Yeah, the target I went with was at 35.76, which was the high of that Friday, of that Thursday that was, the super big red Thursday, as I pointed out in the beginning. So I went for that target. As you guys can see, this ended up rallying all day before the later weakness during the course of the day, but I was out of this trade on this candle, which was around 10:10 a.m. Central Time, right? I was out of the trade. I called it a day. It was nice little profit, on this trade. Once again, let me go over the trade. Now, the best entry, if I was fully in the zone, for this trade over here, the best entry would have been me taking this shooter that we have on the 5 minute, but that's not what I did. I did not take this shooter, but that would have been the best entry considering that we are bouncing off that Fibonacci level. The Fibonacci level that's supposed to be a resistance is now being a support. Remember, our high of yesterday, Monday, have already become a support for us because we were buying that high of yesterday. It's become a support for us. So I could have just risked this first 5 minutes candle, but that's not what I did. I wait for 10 minutes. I saw the 15 minute right there, the 15 minutes over here. This was the first 15 minutes of the day. 1, 2, 3, 4, 5 minutes, 15 minutes. It was red, but the pullback was not strong. You understand? It's not like it's about to dump. So my goal is that I'm going to risk that to the low of that 15 minutes candle. Let me make it a little bit more bigger, so we can see this. I'm going to risk that low right there, that once we don't break below this low and we hold strong, I'm going to go long. So I went long above the high of the first 10 minute, right? I don't want to wait all the way to the high of the 15 minute. So I just went long on that, and it was a straightforward trade. As you can see, I mean, it struggled a little bit for that second 15 minutes of the day. The ticker struggled a little bit in this second 15 minutes. But boom, that third 15 minutes was 45 minutes into the trading session. It was just a move to the upside from there. So that was that trade. I wasn't in the trade for this pullback. I wasn't in the trade for any of this. I was already done, good enough profit, and I have some other work to do anyway. Today it was on OXY. I'm gonna walk us once again through the setup. One thing to just keep in mind about OXY is the oil sector. Most of them, they are having their earnings coming up. I know that Chevron had their earnings yesterday, and I know that Oxy is going to be having their own earnings on Friday. I expect some type of run up, for these earnings towards the upside. So here's what I was looking at on these Oxy earnings that is coming up. Yesterday, I do know that this was the high of yesterday, so I have that marked. I wasn't looking for a bearish trade on these at all. I know that that was the high of yesterday, and I was not even interested in this next high. I was much more interested in this one right here, which was like, an opening dump on April 17th as my next profit target. However, because of the way we closed yesterday, I think I showed us this also with AA Alcoa in my other trade. I had my Fibonacci drawn on this one. Just I want to see maybe we can have like a opening around that Fibonacci, then having a bounce. Once again, one day continues into the other in the stock market when you are doing your analysis. It's a continuation of one day continues into the other. So I have that, and anytime I'm taking an entry off of a Fibonacci bounce, my profit target is the full retracement of that Fibonacci back to that high. Let's say, we retrace to a 50% level. If I take a trade on that 50% level, my profit target is going to be at the 100% that we were retracing from. All right, so now let's look at this on 15 minutes. This trade is probably one of the straightforward. I don't want to say simple because that will be like undervaluing the knowledge and the experience that goes into it. However, it was straightforward, very straightforward. So when we opened this morning, this is the first 15 minutes, it was bearish open, right? We opened, the candle was red. Even the second 15 minutes candle was red. However, remember, like I said, I wasn't looking for a bearish trade. I'm looking for things that will support the bullish sentiment that I had, for Oxy. And the first thing I saw is I saw that we bounced off of that 50% Fibonacci, that we set from the retracement that we were having yesterday into today. We have that bounce. First 15 minutes of the market, second 15 minutes of the market, I've already seen the bounce that I want. Now, my risk for this trade was a little bit bigger than I typically like. And my risk was I'm going to take the high of this second 15 minute since we already bounced off of that Fibonacci. And my stop loss is going to be 61.82. It's kind of wide. So instead of me buying a whole lot of contracts that I would have bought, maybe like, 10, 15, 20 contracts, at least for my account size, I only did 5 contracts, for this trade to keep the risk at minimum. No matter how good you are technically, if your risk management is SHIT, you're not going to make any money. You understand? So we took the bounce off of 62.34, and as you can see, no one red candle in sight throughout, even until we got to that target at 63.04. And I'm even going to go to the 5-minute so that we can see, why I always try to take my profit as soon as we get back to our entry. This was the 5-minute. As you can see, it was scary. The opening was scary, big red candle and stuff like that. But look at that pullback. Even if I wanted to be aggressive, but I try not to be aggressive on when I'm taking my retracement trade, right? I could have been aggressive. If I was aggressive I could have taken this 5-minute, bounce over here, and then my risk would have changed. My risk would have been 62.05, to 61.82. But then, that would be like you taking every shot that you get. I try not to do that. I try not to do that because it could literally go against me. I want to see more things in my favor, before I get into the trade. And literally another thing to keep in mind that shows the strength of what was going on over here is this was our open, right? We opened this way. We have this open, we have this red, right? Look at that retracement. 1, 2, 3, 4. It shows some strength, like this is going to turn around, right? So I try to look at the 5 minutes on the side, but I don't make my decision based on the 5 minutes every time. I try to always make my decision, on the 15 minutes. Just collect more data so that I don't get myself clapped, right? So once again, the first 15 minutes was red, the second was red, but we were coming into a level. Even if you look at this, we bounced off of that level yesterday, right? So there might be a potential of us to bounce off of it again today, and I wasn't even planning on going short. So it was a quick trade, to the upside. It was very sweet. My risk was from 62.34 all the way to 61 82, typically more than the type of risk I would like, right? However, especially since I try to stick to my levels as much as possible, but we took that bounce off this level. We bounced, and all these 15 minutes candle, they were just green. It was a good trade. I hope this helps somebody out there. Once again, rest in peace to Mr. Rob Smith, Rob in the Black. I use the STRAT. I combine it with Fibonacci. I combine it with, support and resistance level, and it's really helped me a lot. Hey, if you like the content, please like. You could choose to subscribe also. And if you have any question, just put it in the comment section. I will try to get into it. Thank you, and God bless.